to Weekly Market Watch. I'm Alice, Global Market Specialist from PhillipCapital Global Markets. Let's have a brief review on China and US stock market's hotspots, as well as a brief introduction to the recent Chinese companies listed overseas. Recently listed companies ushered in the earnings season. US tech stocks rose widely on the last Friday of October, and Nasdaq got its biggest gain in nearly 1 year. Amazon's performance was extremely appealing. The stock price jumped 30% to $1,100 with a market cap over $530 billion. Personal net wealth of the founder and CEO Jeff Bezos increased by $7 billion to a total of $90.2 billion in 1 day, surpassing Bill Gates to become the world's richest man. Meanwhile, in the A-share market, the most expensive share, Guizhou Maotai, hit its all-time high record again. The company announced its third quarter earnings on 26 October, of which net profit increased 30% over the same period of the previous year. Stock price soared 50% for 2 consecutive days after announcement of the earning results, and the market cap increased by 10 million yuan instantly. The share price dropped slightly after hitting 655 yuan, which is its highest price till now. In addition, many Chinese companies choose to list in Hong Kong and US these days. Following the snapping up of Guan Online last month, Tencent's subsidiary company, China Literature IPO, triggered a buying boom again. The company offered 151 million shares in the IPO process, and priced at 55 Hong Kong dollars. It was more than 500 times oversubscription till 1st November. In accordance with the 200 shares per lot, investors need to pay 11,000 Hong Kong dollars for 1 lot. It is the most expensive interest fee of new shares in Hong Kong market this year. In the US market, the listing of Chinese companies is entering a period of intensiveness. Since the end of September, Chinese companies such as THD Holdings, Best Incorporation, and RYB Education have listed in US consecutively, and more companies are going to list in US stock exchange like Sogo and Jianfu Technology. Of those recent listed Chinese companies, one of the most intriguing and controversial stocks is an internet finance company called Qudian, which was listed on Nasdaq on October 18 and is the largest IPO since the beginning of this year. The stock opened at $34.35 US, which raised 43% from its issue price on its first trading day, and increased 16% on the following trading day. The situation changed suddenly. It is said that the main business of Qudian is facing strong supervision, and its business model triggered media doubts. The share price immediately plunged on the 4th listing day and even below the issue price. As of October 31st, the stock closed at $24.9 US. Up to now, there are 3 Chinese internet finance companies officially listed in the United States, including the Yirendai, China Rapid Finance, and Qudian. In addition, Paidai and Hexindai, 2 companies, have also submitted their prospectus to the United States Stock Exchange. Due to the vast market prospects in China and the fast development of cash loan business in recent years, the capital market has opened up the imagination for these Chinese internet companies. However, due to the uncertainty of the external regulatory environment, the stock price volatility of these companies is also intensifying. At a time when the credit system in China just set up and the financial supervision is more tight, development of these companies also faces severe challenges. With this, we have come to the end of this week's Market Watch. For more information on global equities, you may approach any representative from Global Markets. Subscribe to us on PhillipCapital YouTube channel and Facebook for more Market Watch videos. Thank you.